G'day everyone, welcome back to Pete's Investing. Today is March 8th, 2023. This is the Nat Gas price update. Since yesterday we did say it's come and reached this retracement level, a 50% retracement level on the 4-hour chart. But just be mindful, if you're new to the channel, we're still tracking this CCI 1500 and it's still well below the moving average on the daily. Although it has broken up through the moving average on the 4-hourly, but that moving average is still in a downtrend, so very cautiously taking long positions there. And on the hourly chart, it has the CCI has broken into a more bullish divergence as opposed to the price chart, which was descending. That's in a quick summary of the 4 time frames. Now just be mindful where we are on the support line here. It's bounced off that and it's reached this key resistance area on the daily, and that's also demonstrated here on this 4-hour chart. So again, it's bounced off this 50% level, and since yesterday's video. And what we can expect from here is we did say we want to see more bullishness. We want to see it break above this key resistance area, which is also demonstrated on the daily, then ultimately break up through this descending diagonal trend line, which was drawn back here based on those highs. And again, we want to be more positive. We want to see this gap lessen between the moving average and the CCI to go long. Now, depending on what time frame you're trading, you can still trade this under very small time frames, like on a 15-minute or here on the hourly at least. You can see here since yesterday it's come back down towards the moving average and bounced up from there on the CCI 1500. That could be a potential entry point to go long, but again, cautiously go long. Just be mindful when you're trading these on the smaller time frames, you do want to make sure you're in the direction of the longer term time frame. So for example, here you notice on the hourly chart the CCI is broken to the upside, and there was some upside movement on the price chart, but it was very minimal. And why is that? It's because if you look at the move the cursor there on the 4-hour chart over here, it's still below its moving average, and that sort of gives it a much less potent bullish momentum until we see a more strong move to the upside. For example, that point there would have been a better trading exercise if you're trading the 1-hour time frame. So just be mindful as soon as you see that break above the moving average and the moving average itself moving upwards, that's also a good opportunity on the lower time frames to trade. But again, if you're trading the 4-hourly here, just be mindful you want to avoid going long if you're trading the 4-hourly if the daily is still in a pretty strong decline. So just be mindful of that in terms of your risk profile. In terms of where we see it going, again, we want to see it break through this key resistance area and then ultimately break beyond this diagonal descending trend line to be more positive about going bullish. To understand how to properly trade the average down process, reference the links in the description below. Subscribe, like and share the video, and thanks for watching, and speak to you in the next video.